There is nothing more humbling than asking the bank for a loan and getting a response that sounds like,
"Sorry, you don't qualify."
Or even worse, they approve you, but with a trash interest rate that makes you feel like you're paying rent on your own money.
But what if I told you that you never have to beg for a loan again, and there is a way for you to become your own bank and control your money without asking for permission?
And that's exactly what we're breaking down today, this concept of how to use your own money like a bank so you can borrow, invest, and build wealth on your own terms.
Yes. So let's talk about this and break it down so that we understand how this whole thing works. First and foremost, we have to understand how the banks make money, because trust me, they're not struggling with the interest environment that we're in right now.
So like Carmen mentioned, interest environment. When you put your money in a savings account, they pay you what? 0.05% interest if you're lucky.
Yeah, and then let's talk about like when you get money. So when you get access to money, you're probably going to pay 6%, 7%, and even 30% on credit cards. I mean, they're flipping your money and making a complete fortune.
And that is, ladies and gentlemen, the game. That's the game. Banks make money by using your money while keeping you dependent on them.
Now, here's how we flip the script. Instead of giving the banks control over all of your money, you create your own system. And the way that you create your own system is actually using a tool called whole life insurance.
Now, wait. Life insurance? I know what you're thinking. I thought that was just for when you die, death benefit. But that's not the case.
No, that is not the case at all, because the wealthy actually use whole life insurance for their own private banking system needs. They store cash, they borrow cash, they invest cash, and they're still able to provide an inheritance to their family without asking the banks for permission.
So here's the thing. Your policy builds cash. When you find a properly designed whole life policy, a portion of your money goes into cash value account that grows tax-free over time.
And exactly like Darius said, let's make sure that we set the tone. When we understand life insurance products, traditionally we're just thinking about when we buy life insurance, it gives us a death benefit. But we're talking about a properly designed policy, like Darius just said, where you can design it in ways that really are flexible towards your specific needs today. It's called living benefit. So let's utilize life insurance for our life while we're living now, as opposed to always planning for the death benefit piece of things. Don't get me wrong, this is still amazing to have, but you have to know how to have your cake and eat it too. And unlike the banks, the cash that builds inside of your life insurance policy sits still, and it's going to compound so that you have infinite access to it.
Yeah, so once your cash value grows, kind of like what Carmen was saying, is the fact that you can take out policy loans against your cash value. No credit check, no approval process, and no begging a bank.
Exactly. You're literally borrowing money from the life insurance company. You do pay interest on it, but you don't have to beg for money. You don't have to ask permission, because your policy is growing cash and you're basically utilizing your policy as collateral.
So here are the payback terms. Here's the best part. When you take out a loan from the insurance company, you decide when and how to pay it back. There's no late fees. There's no debt collectors blowing up your phone.
You have full control because you are controlling the banking system. So now that we've talked about how this process works on a high level, right? Let's talk about how to use this strategy to grow wealth.
Right. So instead of paying crazy credit card interest rates, like our about 30%, 28%, whatever it is, use your policy loan to wipe out all that bad debt. Now, instead of owing the bank, you're paying yourself back with interest.
So here's the thing. Darius just shared a strategy that you can use your policy loans for paying off high interest debt, right? All you're doing is flipping who owns the debt. And in this case, it is an amazing strategy because Darius and I have used it to pay off over $120,000 of credit card debt. And you can watch this video here to see how we actually did it. Another way that you can do it, for those of you who may not have any debt, is to invest. You borrow the cash value out of your policy to invest in real estate, to start a business. You want to invest in cash flowing assets. And what the wealthy typically do is once they borrow from the policy, they use the interest that they've earned back from those investments to repay the loan to the insurance company.
So what if you need a car? or a home renovation. Instead of financing it through the bank, you borrow from the insurance company and pay yourself back and keep control of your money.
So let's dispel some myths. I know the very first myth that we typically get is whole life insurance is too expensive. And you're right, whole life insurance is more expensive than term insurance, for example. But the reason why it's more expensive is because it provides other perks, right? You're not just going to look at a minivan and compare it to a Ferrari. They have two completely different values. So you have to understand, again, going back to having clarity, what is it that you actually want out of a life insurance product, and then understanding the costs that are associated with it. So yes, it is more expensive. However, we have 8 policies, whole life insurance policies, and we use them strategically for financing our lifestyle.
Right. And here's myth number 2 is that policy loans will ruin your cash value. That is false. Your cash value still earns interest because you've used your cash value as collateral. You've used your cash value as collateral, so you're still earning interest in your cash value. Your cash value is still earning interest. And that's what makes this strategy so powerful.
Well, and I also realize too where this myth can come from, because where the system can be wrecked is if you aren't paying the loans back and you're not paying the interest back. That's how this starts to get dicey. And if you ever hear of situations where people are like, the policy didn't work, it's because they probably weren't paying the loans back.
Right.
If you missed that part of this whole conversation, we said you get a loan and you pay it back.
The same way you borrow money from a
the
bank, you need to pay back the insurance company. Now, it's not going to be a hit to your credit, or it's not going to affect your credit to get a loan, but you still want to be a good steward of money when it comes to repaying the money that you borrow.
Exactly. And then the other myth that we typically get is that this only works for the wealthy. And this can't be further from the truth, because we know middle class America who have whole life insurance policies. Anyone can use this strategy. It's just all about buying a life insurance policy. Don't allow this concept to intimidate you in any way, because all we're doing is buying a life insurance policy the way anybody else would. And we just know how to design it and use it for our specific benefits so that we can get out of high interest debt. We can start investing. We can create legacies, whatever it is. The point is, this isn't just for the wealthy.
I think the reason why people think it's for the wealthy is because they're more responsible with money. That's how they got wealthy. Typically. But instead of thinking it's just for the wealthy, it's only for the financially responsible people.
I like that.
It's only for financially responsible people, which means that you're maintaining your policy premiums. That means that when you borrow money from the insurance company, you're paying it back, paying yourself back plus interest. So for example, if I use it to pay off high interest debt and I'm paying 28% interest on my credit card, if I use it to pay it off, you take that 28% and start paying it back to yourself. Simple.
Or back to the policy.
Or back to the insurance company. Yes.
Exactly. So the bottom line that we want you to get from this conversation is recognizing that you can shift control so that you can create more freedom, more space, more wiggle room, like I like to say, in your financial journey. Because there's nothing like being stressed along this financial journey because you don't have space. You don't have the ability to stretch and to have flexibility. And so that's something that Darius and I very much value for our own lives. And we had to find the tools and the resources that could support us with that.
Right. And Carmen and I, honestly, we weren't always financially responsible. That's how we racked up $120,000 worth of debt in the first place to even get to this point. But when we flipped that switch and we started being more responsible, this started working for us, and we wanted to start teaching people about this strategy. So if you're ready to stop depending on the banks and start using your own bank like the wealthy do, or like the financially responsible do, check out our program, Financial Freedom for Your Whole Life. We teach you exactly how to build your private bank system step by step.
And if you like this video, please hit the like button and subscribe for more financial education, and drop a comment below and let us know what is maybe the worst experience that you've had with the banks. We want to hear it, and we want to learn from you all so that we can continue to create more financial freedom for our lives.
All right, and check out our next video, how to own your own lifestyle.
And remember to own your own lifestyle.
Or someone else will.